Television is still the kernel, but it's the social media that actually disperses the data much faster than the original airing content. And so for retail and for consumer goods and services, this platform is very important because it has one thing that really matters. It's measurable. Now here's something you should understand about the institutional world that deploys capital to public and private companies in retail. Retail is one of the most important sectors of every economy on earth. It is so much part of GDP growth that institutional investors watch it like a hawk. It gives them a very good read of the growth potential of the economy they're investing in. The bogey of every institutional investor, although they won't disclose it to you, I'll tell you what it is. They have to make 6% a year, worst case, every year. Where has over 70% of the returns come from in the equity markets, the markets that fund you, over the last 40 years? It has not been the appreciation of stocks. It has not been a higher price of those stocks. It's been the distribution of dividends. If you have to make 6% a year, every year, you want to take some of the risk off the table. And the way you do that is you ask for a dividend. That's why, and I'm going to show you the data in a moment, the fastest growth of any metric in business today is dividend growth, the enhancement of cash distributions back to shareholders, which means if you're operating a business, you have to be profitable. Now, why I like this is it takes the emotion out of the decision. An institutional investor can put $100 billion anywhere they wish, but they have to make 6% or they lose their job. So they look for the path of least resistance with the highest probability of that outcome. And retailers and real estate operators and anybody in such an important sector as retail that can do that for them will have a lower cost of capital. I want to make reference to a comment one of the largest US institutions said to me about retail, who invests in all 10 sectors of the S&P. She said, retail is the most unique sector in the economy for this reason alone. Great managers in retail have to be artists and scientists at the same time. They have to have some unique skill to be able to forecast what their customers want to buy from them, and then when they sell it to them, they have to be able to measure it in a way that lets them be profitable. The fastest way to make money is to invest in customer service. Let's say you don't even grow the sales. Here's how you make money. If you can repair your customer service to be number 1 or 2 in your sector, in your industry, in your niche, you can raise prices as much as 15%. Yep. The telco guys figured this out. The better the service became, the less the churn was. Customers are loath to leave a service that is doing a good job for them. Business is war. There are winners and there are losers. I like managers that get up in the morning, want to pour boiling oil on their competitors, salt the land their offices are on, and steal their market share without breaking the law. That is what made this country great. That's what keeps people competitive and brings the very best forward. It is the job and the role of the shareholders who are paid dividends and profits to take their money, as every great Canadian should do, and give it back to whatever charity or cause they wish. But it is your job to make them that money. Don't you ever forget it.